Hello, everyone. This is Brian Beamish coming to you, the Canadian Rational Investor, CR Investor on Twitter and Facebook. For you, this is late Saturday. I was actually going to do a show earlier, but I fell asleep, but a silly boy. So anyway, I woke up now, and I thought I'd just do it now. Bitcoin is timeless, isn't it? But anyway, here we are. Sunday morning, June 29th, 2014. Lots of stuff here to talk about today, and I'm going to try my best to work through all of this list. And I think the thing I want to talk about first is uh, let's see, how do we go about this? I'm going to break the show into chunks, probably maybe like 5-10 minute chunks. So if you want to fast forward, if you don't want to listen to all this admin stuff, then we should probably start the actual chart analysis. I'm thinking maybe in about 10 minutes or so. But there is some housekeeping I need to talk about first, so I'll try and keep this brief. So. Few things I wanted to just review to that end. I have on the screen right here just a nice little summary of the stuff that I want to review today. So first and foremost, I'd like to talk a little bit about the show formats. Basically Monday to Friday, I'd like to try and do a 5-10 minute review of just sort of what's going on in the broader picture. It's been a process over the past few weeks to work my way towards that. Some shows are about a half an hour, and I find to talk about this entire Bitcoin sort of summary, usually it takes probably a good half hour, 45 minutes to get the complete picture. So not a big surprise. So I'm really working on trying to get that down to 5 minutes. And then, as I said, these Saturday shows should be like the full format. And what I'd like to do going forward is on these Saturday shows have a set time, and then have guests, and people can come into the Google Hangouts, and we can do it live on YouTube and stuff like that. So that's the ultimate goal, to sort of get, because I think there was quite a bit of positive feedback about those shows. I was very impressed with that in the spring. Um, then I want to take a look at this concept of PAM. Somebody showed me this website, and I thought it was really interesting how you, the audience, can participate in these models. And what we've demonstrated through these daily reviews is that the setups, they're fairly consistent, and they just keep coming along. So and if I'm going to talk about the setups and trades and see them work and targets hit and fun things like that, it's not a bad idea for us to maybe just run a portfolio. So that's what I want to take a few minutes and talk about this PAM thing. It's an idea that I've been kicking around. Then we'll get to the chart review. And we're going to do these Saturday shows as sort of like, we'll do it once a week, the full meal deal. But it's basically the video that one of the paid subscription member levels gets on a daily basis. And it's sort of, you guys have been sort of seeing what it is. It's about a half an hour analysis. So, they're about 35 minutes, 45-minute videos. And for the paid member service, that would basically be part of the package. And at the end of that, at the end of the 4-week review, or excuse me, the full review, we'll review what we should be looking for going forward. What we should be looking for going forward. So that includes things like potential news events, chart patterns, obviously, setup potential, blah blah blah. Then I'd like to take a few minutes and just review a couple of the charts that I posted here recently. I like to keep a running commentary view on the fear-greed cycle and the ultimate paper asset proxy at the moment for the world is the US dollar index. So always a good idea to keep an eye on that and sort of what our bigger picture scenario looks like. And then it was interesting this past week. I noticed that one of the WDB model stocks has spat up a technical buy signal. So I posted an update on that. Interesting to see how that played out. Then, as the show sort of winds down, I want to take a look at, and maybe I should do this up top here, but I want to take a look at the different packages that we're going to offer you guys. Like it's remarkable the amount of demand that I've seen come out of this offering. So I'm really impressed with that. And to that end, a guy's got to make a living. So these are some of the services that I've been kicking around that I think might be of value to you guys, and I think how we're going to build out this paid site. So, and when I review all this information, your feedback is much appreciated. I'm building the site for you guys more than I am myself, but we'll see how it goes. And then we'll just wrap up the site with some thank yous, because of course Google and YouTube and TradingView, well, really are the people that can make this possible. So that's sort of what I want to review today. That's what this show's format's going to be. It's going to be sort of sloppy, but the long and short of it here is there's a whole bunch of stuff that needs to be reviewed that I thought we should review. So concentrating, let's see, what we'll do is we'll just zoom in on the part that we're sort of focusing in on right now, and as we sort of move along, we'll just move the slider down. Okay, so really want to concentrate on, I guess, we've sort of covered this. I mean, we'll just take a couple minutes and review this. I found that the daily summary seems to get some pretty good feedback, so I think we're on a good track there. And like I said, I think it seems to me somewhere about 10 minutes seems to be the norm. If I like the other day, I guess I did a 5-minute one and it just seemed too short, and of course half an hour is obviously too long. So that's what I'm going to plan on doing Monday to Fridays. And then the Saturday shows, like I said, I think anybody, if you've watched any of my archive stuff, Saturday show was well, actually all of the shows that we did were very popular. I mean, it was really just more back end issues than the reason why I took the show down, rather than front end. But the shows themselves were very popular, and actually I'm really happy because I recently was able, I sort of reached out after a bit of a period of pause to some of my TST buddies, and they said they'd be interested in, coming in, just doing maybe a 5-10 minute interview about, so you guys can really get to know what like real traders, trade like currencies and stocks, and actually I can't wait to get Gris on here, because if you think I do Fibonacci's, holy moly, his Fibonacci screen will blow you away. It's like literally looking at the matrix. So it's really cool. So I think there's going to be lots of fun with that, and I think once we get this sort of paid site flowing, I think I'm going to be a lot less stressed about all of this, and I think we can go back to having fun with this. Admittedly, over the past couple months, I've been a little stressed about what my personal direction has been, and what direction I was basically going to go in. And what's interesting is that the outreach from you guys has been so dramatic that I think it's sort of told me the path that we want to go in. So. Anyway, long and short of all that is I think we should have some fun on the Saturday shows, and I think there's tons and tons of content, and I'd like to get the guest speakers again into. They were fun to listen to. So, all right, so that's enough about the show formats. That's basically what you should expect going forward. Monday to Friday, I like the 5-10 minute reviews, and I've been getting a lot of positive feedback from that, so I think that's a good idea. And then the Saturday shows are about 45 minutes or so. Really just depending on I found that the 2 hour shows were just too long, so try and cut it down a bit. Um, and that's sort of a teaser in that the one of the membership program packages, they get that full chart review every day. But anyway. Okay, so moving on, I wanted to talk a little bit about this BTCE PAM model. And somebody brought this to my attention recently. Let's see if I can pull up the web page here for you. Let's see, it would be bear with me here a second. Okay, so it is interesting how it does that backwards like that. Here. So you guys should all be seeing this site here. I was interested in this. I was talking on the TradingView page the other day, and somebody was like, Brian, you should really set up one of these PAM services. And if I understand them correctly, it works something like this. I'll set up one of these master accounts, and we'll just take the setups, and maybe I'll throw like a half a coin or something into it. And I'm not looking to make 100% in a week. That's not what I'm looking for. But if we could annualize returns of say 35%, I think that's very respectable and very doable. So like I said, I'll throw maybe like a half a coin into a master account, and we're just going to take the setups that I talk about in these daily videos. Because I think the setups are fairly obvious. Hopefully as you've watched through these videos, really what it really takes is just a bunch of patience. And we don't need to shoot for like 20, 40, 60, 80% returns. We take 5, 10% return on that half a coin and do that, I don't know, 8 or 9 times in a calendar year. And, that's some serious money. So as I said, somebody said, Brian, you should probably really take a good look at this. And what I'm going to do, I think, is we're going to set up one of these master accounts and throw a half a coin in. And then really you guys as the viewing public, this is your opportunity to participate. If you feel like participating, you can set up a slave account. And basically what happens, if I understand it correctly, is it just basically becomes a pool. And the number of coins that are purchased through that pool, because we'll just take the whatever the master account trade does, the slaves do off of it. We'll just take that trade, and if I understand it correctly, I mean this if we gain a following with this cast, that half a coin that I could put in, if you all put in like a tenth of a coin or a 20th of a coin, well, you can start dealing with some serious amounts of coins. So anyway, been giving this some serious thought, and I think I'd like to get it up as both a way for you to participate in the actual trade setups that I do on these videos, and a way for us to sort of build a communal Bitcoin experience. I think it'd be really cool if we all have a skin in the game. Then I'll see the comments on these YouTube videos fly. All right, so something I'm going to be working on and incorporating into sort of the participation package. So I wanted to mention that in this video today. Okay, so let's see if we can pop back over to our okay, we'll go back over here. All right. Okay, so we're probably about 20 minutes into the video, so I'll make reference to that maybe as we work our way. But I think basically we're going to concentrate on this right now. And I know this is a very crude way of doing the show, but I just want to make sure that the message is nice and simple. So let's pop on over while I get this set up. And we'll go load. Oh, and so this is another thing I wanted to talk to you guys about, and that is if I do start doing this PAM, and those are the trades that we're going to work off of, then they use, I don't know whether you noticed on that site, and we'll show it to you again. Let's see, where is it? Over here. They use BTCE. So because of that, if I'm going to incorporate this PAM program and taking the trades and letting you participate off of them, I'm going to have to switch this analysis that I do on these from BTCE, from Phoenix, which is the one that I had my account on at the moment, over to this BTCE. And what I've found with each exchange is they have their own nuances, and their chart analysis is a little bit different. You know, it's funny, and I think I talked about this recently. It's funny to listen to the community go from 1 week to another week. Oh, I like this exchange better. Oh, I like that exchange better. Oh, you can't trust these guys. You can't trust those guys. And, you know, we've talked lots about this. I mean, the long and short of it, unfortunately, is that, you know, these are unregulated markets. You know, actually, I suppose we're still talking a bit about this. So sorry to tease you there, guys. We're still talking a bit about this. These are unregulated markets, and so as a result, lots of shenanigans. And it's the old caveat emptor. This is dangerous stuff we're playing in. And I know, you know, for some reason I'm drawn to the Bitcoin community. I like the story. I would like it a lot more if they were regulated markets, but as they aren't as of yet, so as a result, we got to live with what we got. And yeah, that's part of the game. This is dangerous stuff, you know. Whenever you're dealing with serious money, this is, you know, it's risky stuff. And really, it should be incorporated in our trading plan that we understand the risks that are involved. You know, because you know, the Mount Gox you know, fiasco is a perfect example of what unregulated markets do. So anyway, I don't mean to scare you guys, but the long and short of it here is we're all big boys and girls, and we have no excuse for falling into the trap of saying things like "I didn't know." You know, we just don't have an excuse. We know what the risks are involved here, and really we should act accordingly. But anyway, so having said that, I'm not quite sure how I got off on that tangent. The long and short of it here is if I'm going to run this PAM service, they run off of BTCE. So as a result, I'm going to switch the charting and the analysis I do over to BTCE. And of course, as another plug for the paid membership, the Phoenix analysis will continue for various paid members. All right. So let's see what I'm showing on the screen share. Yeah, okay, so here's the 1 hour chart of BTC. So what we're going to do here, and it is now, I guess, about a half an hour into our show, is we're just going to go step by step, and this is what a typical analysis I would do on a daily basis. Maybe not so much off of the daily and the 4 hour, but definitely off the 1 hour and the 15-minute. But we're just going to start from the basics, and we're going to work our way up until so we have a very clear understanding of what the market's doing. And you know, I see it's top of the hour right now. Well, actually, it's bottom of the hour. I see that, let's see how long this takes. I think it should take about a half hour, 45 minutes, just to have an absolutely clear, concise idea of what BTCE is doing for us. So What I do to start off is I'm going to go over to this tradingview.com. It's a nice simple website, and I'm just going to pull up a nice BTC US dollar chart. And you just type in this symbol box. Really simple. BTC USD. And of course, nothing comes up. uh, anyway, I won't get into the symbol entry. I'm not quite sure why that's doing that. Anyway, so here's our Bitcoin dollar chart, and it's daily. And this is BTCE. And I like using a certain model of indicators. You guys have probably heard me talk lots about them, so let's put those on there. All right, so we have price, we have volume, and we have momentum. And I study momentum with two indicators, and really you could argue moving averages is a third one, but we won't get into that now. But my two primary momentum indicator tools are the raw MACD histogram of the 9 and 30 moving averages, which gives me a nice clear indication of just pure raw momentum. And my Willy indicator, let's see if we can show you the title. There's the title, Willy, which is nothing more than a modified Williams percentage R, where I take the indicator itself, which historically is 14 periods, and I stretch that out to 21 to give me a little slower signals. And then I apply a 13-period moving average, exponential moving average, to that slowed Williams percentage R to give me my overbought and oversold condition indicator, or what I would consider stupid. And the reason why I say stupid is because, simply put, whenever the moving average moves into these overbought or oversold zones, it either says one of two things to me. If we're in a range market, then it says that we're near an oscillation point and be careful, the market could reverse. Or it says that we're in a strong trending market and is very frothy. And regardless, if you get into a stupidly overbought condition here, as you can see here, regardless of whether it's range or whether it's trending, really, I don't have any business buying there, and you often get yourself in trouble. I really don't think that, if you had missed the historical breakout on Bitcoin, and really I would argue the weekly breakout on this BTCE, you can see a sort of head and shoulders pattern here, was moved through this high here, whatever this is, 126, looks like 126.57, somewhere in there. Should probably just put on a line on that. Boom. Boom. Somewhere in there. And it was charging along up here. Really, I don't think you have any business buying. That's very dangerous. Really, you need to, and sure enough, if you had bought, say, on the panic high, like right here, Brian, it's going higher, Brian, it's going higher. No, finally, I want to get in. I mean, there were actually times when the market was not stupid and actually was stupid oversold, and price was actually less than there. So, the bottom line here is, when a market goes parabolic or trending like this, you've missed the move, right? You should have been buying here. So really chasing it up here is very dangerous. And really, you just got to wait for it to calm back down, put in a stupid condition going the other direction, and then you can consider buying it. So anyway. All right, so this is our daily chart, and really I'm just going to look at it exactly the way that I would look at it if I was considering buying. And really that's what all of this is about. It's just nice and simple. Okay, so first and foremost, let's see what this fib is. Boom. Yeah, let's project that over time. So that looks like a pretty important number. Actually, let's do it here. All right, so this high 1,000, what's this number? 1,095.20, 1,077, 1,069, 1,077.23. 1,077.23. $1,077.23. Oh, 1,095.20. That's higher. 1,095.20. That's off that high. All right, and this low is 75 on the nose. And we'll see how well the round number theory works here. All right, and this is OTE, and let's reverse this. Other way. There we go. Ah, fudge. Okay, let's try that again. So, OTE, done. Okay, so what do we have here? Obviously, this stands out as an important mark, and I always like to try and start these boxes off of the extreme level. So, off of this entire move, this is the optimal trade entry zone. Or where we like to say, where would institutions most likely want to buy if they were a buyer? And I think, for our purposes right here, I'm going to get rid of the log scale. Yeah, that's better. And so we can clearly see, I mean, it's incredible when you do these OTEs, because you can just look at the chart and go, oh yeah, makes sense why that bottom there. Makes sense why that bottom there. Makes sense why that bottom there, And then, of course, we have a nice saucer bottom. Isn't that incredible how that works? It's just stunning. Okay. So what are some simple conclusions that we can draw off of this? I think the most simplest, of course, is we went through a monster bull run, and now we've gone through our natural correction. We know that our first stop target usually gets lots of play. That was there. So not a big surprise on the run up here. We came down, we tagged our first stop target, then went going running back up. And then, we could argue very simply, talking market structure. We had a very well-defined M here, right? Boom, 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 breakdown. And I suppose, the long and short of it here is that bearish market structure was confirmed when the market traded below this level here. We rallied up, came down, made another low into the OTE zone. So not only did our first stop target help us out quite a bit there, but the OTE zone helped us out. And, anybody who watches my shows or any of that kind of fun stuff, or while reads my blogs, knows that I love to comment about Mountain Man and his 61.8 tag. And he would just blindly buy this, especially on a first tag like this with it not being tagged yet. He'd just say, buy it. Done. And, you had some key lows to work against here, so not a big surprise that, you found some buying support down in here, and that trade quickly worked, right? So Mountain would have made, of course, a pile of money. Drive you nuts every time. But anyway, interesting to see how they ran the stops on these highs here on this move, but could not break this original top. And you've heard me comment before, market structure that looks like V's is inherently bearish, right? What you really would have wanted to see is a nice, you know, W pattern to get bullish. So, and really this Bitcoin, it's a tutorial on harmonics. It's absolutely remarkable how well it's obeyed all of this. So anyway, V bottom, probably going to be tested again. We came up, oh, look at this nasty top, another one of these M's, Here we went up, and then consolidated. Double top within a double top, me, that's one of my trading models. Hopefully what you guys saw, and what I did yesterday, sort of my big content contribution yesterday, was I did this 1 hour chart. I produced it, and it actually shows all three of my setups that I use to trade, all of them in one chart, which I just was just incredible. I couldn't believe that. So, off of the high, and if you look back on this chart, the high was 668 down to the low. This is a 50% bounce. You've heard me talk lots about this, and here's the double bottom within a double bottom. So here's your risk reward, nice trade, and boom, worked nicely. So that's kind of what I see happening. Where was I? Oh, I guess this is what we were here. So this is a double top within a double top, and that's confirmed. Breakdown, away we go. You could have done a 50% level from this peak down to this low, and probably somewhere in here. So not a bad risk reward. And actually, we just saw one of those trades recently on BTCE. So price works its way lower. At this point, the key is let's watch this low, right? So this low was 420 on BTCE. So let's watch this low and see if it's taken out. So they came back down into the OTE. There's Mountain Man 61 point tag. Again, it worked, jerk. But again, another V bottom. So, a little suspicious. And then look what we put in, another M top up here, right? And we broke down. And then, this low 420, it was broken here, right? We went down to 348.98, 341.51. And what I find really interesting, of course, is that I'm a big fan of the sweet spot of this OTE zone, and that's the 70.5 fib. So that's just halfway in between the two, right? And look at how price acted here. I mean, basically, hit the sweet spot, railroad tracks, see you later, I'm gone. So obviously that was a very significant level for this thing. So incredible how that works, eh? So because this low was broken here, basically market structure is still making lower highs and lower lows. We have to start seeing a period of basing, or we start making higher highs and higher lows. And before we can really start to get bullish. So yeah, we did have this rally out of here. And you can understand on a lower time frame basis, we probably had a nice little bull. Looking at our setups, this is what I call the bot trade, and it's a play off of these bull ABCD or bear ABCD patterns. So you could argue there's a very little one here. Keep in mind this is daily, so if you looked at like in a 1 hour, 4 hour, it would be a bit more obvious. But you could see that there was a rally potential there. And it rallied up, but then another M, and then we came down and we based. And this is some really pretty price action in here. Not only was it within the OTE zone, you could argue that just off of these fibs here, and when we look at the lower time frames, we might take a look at that. But probably OTE area off of this rally here. We got nice quiet action. I mean, basically after, back, last December, we had days where, this bar here alone, you had the price move of $400. I mean, $400 is $400, that's a lot. The fact that we got price movement, on this doji bottom right here, we had, what was that range? That was a grand total of, About $17. So you can see the volatility was just sucked right out of the market. And then on the bullish resolution of that, we had a whole bunch of nice positive action. You can see a nice base and volume here, nice breakout. Nice momentum bottom here. Willie looking happy. Actually, the raw momentum actually bottomed itself. There was a divergence right here. So through this action, the raw momentum, this turn here just confirms these bottoms. Real good looking action here. I mean, very pretty looking action on Bitcoin. I have to admit. I mean, the harmonics they're really, really pretty to watch. Um, all right, so that sort of brings us to today. I mean, let's be completely blunt. We did come down into the OTE long zone, and that's basically 203 all the way up to 465, or 293, beg your pardon. So call it 300 to 450 bucks, right? Somewhere in there. 375 is a nice nice midpoint. So not a big surprise. Market bottomed in this area. What should we be thinking about now? Well, how about an OTE going the other direction? So it should look something along those lines. So this low here was 340.51. Oops. And the high, as we said, 1,095.20. All right. So off of this low to this high, really not a big surprise. Number one, we got a fight at our first stop target, 38.2. Look at that, eh? I mean, geez, this stuff writes itself. It's absolutely incredible. And then number two, if institutions were going to short and believe this was a range market, where would they most likely want to do that? And that's the OTE short zone. All right, so let's highlight these with yellow. So, what do we see here? Panic low, OTE, long sweet spot, tag, reversal, bull ABCD, beautiful harmonic bottom here. You could argue this inverted head and shoulders right in here. Set up, very simple, bull ABCD off of the bottom here. And 38.2 tag. Lots and lots of reason. Look at this 200 periods simple moving average. I mean, that's remarkable, eh? So you had three solid reasons for the market to move up into this 38.2, and that's basically what we've done, eh? What I suppose one ought to do, and this is a good testament to 38.2, is on this pullback, right? It was a good idea that there was going to be a battle in here, and sure enough, it rallied back up top. One could argue that the 38.2 battle, and we should see some sort of test of these lows. So it's at this point, one could, I guess just for demonstration purposes, we can demonstrate that had you taken the wider double bottom, and I suppose, the guy that I originally learned the double bottoms with, he would trade off of lows here. And he would, whoops, let's not move that around. He would actually risk off of this low here So you could see how the reward window of taking this trade just off of that high to the 50% level, it's about 1 to 1. It's not really what I would consider an acceptable risk reward. So the double bottom off a double bottom, probably not applicable in this scenario. But as we see from lower time frames, and what I posted was we had a 4-hour setup off of this inverted head and shoulders, and that trade went to the bull ABCD target, which was well over 3 to 1 risk reward. So anyway, just to finish off this daily chart, what are some simple conclusions that we can take from here? We had the OTE long tag, set up an excellent buying opportunity, in my opinion. You know, you could argue Mr. Mountain Man 61 fib even was a half decent long entry on multiple occasions. But had you waited for the sweet spot tag, it would have been brilliant. You know, the 4-hour we'll get to shortly confirmed that this was a turning zone, and there was a nice trade that resulted out of it. You know, interesting demonstration of Willie here. You know, sadly, the investing public, they started to get interested here. And this is where Willie went stupid. You know, so long and short of it here is that would have been a horrible place to be consider buying. Now, you may wait for the double bottom to come in, and if this is indeed a new double bottom and away we go, great. Then you buy. That's fine. And Willie's no longer stupid, so that's fine. But just the point here is, had you bought right here, you know, going through all of this correction pain would have just been a waste of your time. So best to, if you see Willie in a stupidly overbought condition, and we also had a bearish momentum divergence there, it set up lots of reasons, just so happened to be at the 38.2. It was a bull ABCD target, and gee whiz, we had the 200 period moving averages. I mean, there were so many reasons to look for a little bit of a pivot right there. Not a big surprise. And as we postulated before, you know, we've hit the 38.2. So the question is, do we now need to do a correction to come back down and test these lows? And if so, where should that take us? And that's kind of where we're at right at the moment. Is we're just seeing how this correction off the correction off the correction plays itself out. So, you know, just looking at it on the dailies, and of course we'll blow up the 4 hour to get a better idea. But you can see how 38.2 on the way down set itself up as an important pivot. Incredible how this stuff works, eh? And ultimately, if I was an institution and I was thinking about buying, where do I want to think about buying? And that is off of the OTE long zone, which just so happens to be sitting right in there at the moment. So let's change that to green. You know, on the daily chart, I think that sort of summarizes nicely what we're going through right now. We had the 38.2 correction off the way down, rallied back up, top, and broke down. So if it was going to break down through 38.2, where's it most likely to turn? If this is indeed a bull market, and that's the OTE long zone, and sure enough, she turned. Once the turn was in, where should we expect a rally back up? First stop target, 38.2. If this is indeed a bull market, then this will resolve bullishly, and where's our next likely target? And that's the OTE short zone, right up here. While we're determining whether this is indeed the bottom, not a big surprise to see 38.2 rejected. We come back down. Now, if we hold this 38.2 and we turn back up and we make new highs, that's a very bullish proxy. And so now we sort of postulate about, okay, what do we think might happen in the future? So if we have bottomed here and this resolves bullishly and away we go, then really I could make the argument that not only can you draw this harmonic pattern, right? You can also draw this harmonic pattern. And what a coincidence, that's going to take us right up into the 61.8. And then if the bigger one proves out, right up into the OTE short sweet spot. Isn't that incredible how that works out? It's just stunning. Let's just tag that line there. So that's basically what I see. Right now we are determining whether this is indeed a real big bull market. And if it is, this 38.2 will hold. And this 38.2, the one on the way down, it'll get smashed. And that should take us right up into this level to this level. Probably a nice target box into there would be fine. And those people that look at horizontal support and resistance, all of these levels here are key. That's obviously going to be an important level. Then if we can bust through there up into here, these highs, and gee whiz, look at that, that's right there. Then if we can bust these highs, then the next one's up here, and the next one's up here, and so on and so on, right? So you can see where the traffic levels are going to come in. So we have an interesting setup here. All right, so that's, I think, a pretty good snapshot of the daily BTCE picture. Let's take a look now at the 4-hour. Okay, so I've drawn a lot of the levels already. Save us some time here. And this is BTCE. We're going to look at the 4-hour chart now. And, I have been recently talking about the year-to-date price action on the FNX and looking at that. I think we have a pretty good idea of a working model here just off of this daily chart, so we'll leave that at that. And on the 4-hour, we're just going to focus in on this recent action here. So here's that low on BTC. It was 340.51. So let's make sure we have that right. And our high here was 668.42. Good. All right. So, so looking at this entire trading range, we see that, and I think we outlined this on the on this fib analysis here. 38.2 level. What do I want to say here? Here's that inverted head and shoulders a little while ago. Nice moving averages, nice bullish volume, momentum. We talked lots about that a while ago. Nice big rally up top. We talked about higher time frames, lots of resistance there. Not a big surprise we saw a top come in there. And if we blow up the short-term action, here's that 38.2. This says 543.16. These numbers probably aren't exactly right. The 673, that's probably off a little bit. What is it? 668.42. 668.42. And this low was 40.51. Right, so 543.16, 543.16, yay, it all lines up. All right, so we had a double top within a double top. You guys remember that from the FNX chart, right? So if we go like this, zoom. All right, so our double top looked like this. Here's the massive one, up, down, up, and then the little double top, up, down, boom. So it looks something like this to this to this to this. And then inside here we have this, 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 and this. And that's very rough. But you understand what I'm getting at. And remember, I did this recent post, double bottom within a double bottom to 50% level is a perfectly legitimate trade setup. So, double top within a double top, which is right here, sets up your sell signal on a move through these lows. Let's get rid of this drawing object. We can remove that box. You don't need that. All right, so double top within a double top. You know, you had your big, massive top breakdown here through 605, and you see this little note here. I said original top. The trade setup, I suppose, would have been on a move through these lows, 627.59 and 625. So either of those levels would work for me. Let's go. Yeah, that's fine there. So 627.59. All right, and what a coincidence. OTE short sweet spots right there, but we'll get to that later. And, you know, the double top off double top were great because your risk parameters were very limited. You know, basically you could even realistically risk right up to new highs, right? And your reward parameters, if you just use the 38.2, are all the way down to here. So very good looking trade setup. You know, nice risk reward. Very handsome. Something along those lines, right? Boom, boom. And sure enough, down she came. Now you remember we talked about this. If you took on the FNX chart, we talked about this. If you took the fib off of this low to this high, it was interesting to see how the market really played. The 38.2 for it was right off of here. So you could have played that as well. Long and short of it here, risk reward parameters, I think were perfectly justifiable to consider the short. That trade worked, 38.2 tag, not a big surprise. Look at the cute little double bottom in here. And so, you know, as a result, what's this low? 545.50. Start thinking about upside numbers. This double bottom, I don't think it represented enough of a reward. You know, maybe on the 1 hour, if we drilled in, we might see a double bottom within a double bottom right here. And it might set up a profitable trade situation back to 38.2. So I suppose you could argue that there was a justifiable reason to look for a bounce back to 38.2 right there. And, you know, as technicians, I think, you know, when my most recent posts, I was talking about the dead cat bounce. And, you know, if we look at price action through here, you know, market structures down, making lower lows, boom, we made a, here, let's move this over so you can see this a little better. All right, so we made the double bottom, right? There's the double bottom. Oh, look at this, nice outside upside key reversal. So if you look at my candlesticks tutorial, you see that that's a nice little buy signal candle right there. Question really is at this level, is the risk reward to the 38.2 justifiable? So if you had your stop just below this low here, probably off the 1 hour, that might have been more than a 1-to-1 risk reward, so that's not bad. Here's the 50% level. You know, that's the double bottom within double bottom back to 50% level is a perfectly justifiable trade setup as well. So long and short of it here, not a big surprise that we rallied up into this area. Dead cat bounce, you know, I was concerned that the momentum here, you know, classic divergence on this move to new highs right here. You see the momentum was lower, and hello, Willie Stupid, big surprise. You know, the way I look at it now, and actually what's interesting about the BTCE is that this high here, let's see, yeah, 668.42, it was higher than that high. So yeah, these trend lines are real. Um, all right, intro. Wow, look at the play right off of this original, just this topping trend line here. Fascinating, eh? Um, okay, so what can we discern out of this? You know, we could argue that this is quite a big harmonic pattern in itself. So really interesting to see how the 50% level, which was this original top 605, may actually turn into a double bottom here. So resolution through this area is really important, in my opinion, in the short term. Here's the OTE short sweet spot. So if I was an institution, I was thinking about shorting, where would I want to short? That's up in this sort of 620 to 640 area. And I had posted a chart on FNX that had suggested that, you know, a nice stab up into this area, really. I think it was realistic. Let's see what some of the indicators are trying to tell us at the moment. You know, nice bottom here. We had the crossover here. We're getting a little bit of a test. Bit concerned that up volume is stalling here. You see how up volume here? It made this high, and then the next bar, which was a higher bar in price, was not a higher bar in volume. So a little bit concerning there. And you can see how the OBV is kind of waned here a bit. So we have this wide bottom in OBV, broke out, nice rally. And I know there were some guys that were nice and long in here, so they're well done buying that. You know, there was somebody that pointed out this was a bullish Gartley pattern here, and I thought that was a very good observation. So I think bullish Gartley would be like A to B, X to A, I should say, and then A to B, and then B to C, and then C to D. So you can see the Gartley there. And then D, kaboom. And so should look something like that. I had commented, I posted on the 1 hour basis, we had a bearish Gartley form in here. And this was 602 on Phoenix, and it actually set up a nice short. I was sort of on Friday with this auction. I was just sort of like, I don't know what's going to happen. Let's see, you know, where the dust settles. It looks to me, I mean, interesting. See this nice double bottom here, and then nice double bottom here. And look at this reversal candle. Nice bullish engulfing reversal candle there. And nice, you know, not necessarily reversal candle, but very bullish candle coming out of there. So interesting to see. Oh, you look at, you got an engulfing candle there. So interesting to see how the 38.2, you know, like I had said originally, if this is a bull market, this 38.2 is going to hold. So interesting to see how we get bullish resolution out of there. Bullish resolution out of there. We will be it looks to me like, you know, we're actually setting up, well, this is a very interesting case study, because I think, you know, I can't draw any super duper conclusions off of price action just at the moment. What I can say, and I think it probably is demonstrated well here, is that basically we're in this trading range, right? 605 definitely looks like a top end of this trading range zone. 545.50 is the bottom end of this trading zone. We're in the up thrust right now, but you can see, you know, like I had posted these arrows when I studied this chart last night. you can see there's a lot of bullish enthusiasm off of the bottom here, right? That's kind of waning now, so I'm a little concerned about that. Like we said, we have a bearish volume divergence here. Momentum's kind of rolling over, and now, while we haven't broken out through the top here, you can't call that a divergence. We definitely can say that we're a little disappointed that this high did not go through that high. Willie didn't really get stupid here. I would just sort of consider this cleaning up. We're sort of, we're above the 50 lines, minus 50, so that to me just simply means that we are bullish. We could form a bottom here and push up into this stupid zone. Oh, excuse me. You know what happens when Willie gets stupid. Those are often great short setups, or at least areas where you should not be buying. And we sort of completing this this harmonic pattern here. And if the harmonic pattern's correct, we should go out and take out these highs, which should ultimately lead us up into this OTE short sweet spot, or at least the OTE zone. And then, of course, here's that original double top within a double top sell level. So I could make lots of argument that we can still push our way up into here. Interesting to see how the 200 period moving average is acting as resistance, 13 period acting as support. And the problem here is if we start losing these and we start slipping below the moving averages, then we could be in for some heartbreak here. So really, I hate to say it, I think it's still the same analysis I had before the auction. That is, we're still in this trading range, and momentum hasn't cleanly broken out to new highs. Volume didn't cleanly break out. So as a result, sort of mixed message there. And based on price, at best, what I'm thinking is that we get a counter trend rally to up into this OTE short zone here, which just so happens to be the original area that they were shorting off to begin with. So that, I think, summarizes the 4-hour chart nicely. I suppose one should, realistically think about price objectives if we do break out one way or another. So if we resolve bullishly out of this consolidation, then one realistically, and this is the great part about technical analysis, is that you'll look at these breakouts now, and you'll be like, oh man, there's no way that's going to happen. And then when the breakouts come, it's remarkable to watch these silly things move to these targets. So, yeah, and you see how high this number is, eh? It's going to be right off the scale. All right. Let's go this way. And we'll go this way. Okay, so, and I've just eyeballed these, right? You watched me just do this here, so. All right, so one can realistically make the argument that if we resolve bullishly out of this consolidation, that upside harmonic price objectives are about $815. One can also make the argument that if we resolve this consolidation period bearishly, downside objectives harmonically would be about $475. Considering the fact that the OTE long zone just so happens to be, it starts at 61.8, Mr. Mountain Man, he's going to be buying that level come hell or high water. Not a big surprise that this harmonic ends up in that area. I suppose, what we should do is say, well, let's see if we get an OTE sweet spot tag. And if we get a bearish resolution, where does that sort of paint a target? And that actually pushes this up to here. If we just go off of current highs and assume we just don't make any new highs, then that's really what we're looking at. Right. And really not a big surprise if we that we actually have been pivoting here, Because gee whiz, look, we got an old nice high there. Incredible how this stuff all lines up. So 38.2, old high, not a big surprise. If this, if this is a bull market, then the outstanding open orders sitting and just saying, look at it. If it ever comes back to this old high, that's where I want to buy, I'll buy it. Well, they're just going to overwhelm supply. It's a little too early to declare victory here. I don't think you can say that, yes, this is going to happen. We're still in sort of this, are we a top, are we a bottom? And we'll need to see momentum and volume help us through this consolidation to give us an idea if indeed this thing's ready to run. But it wouldn't be a big surprise if this was a big bull market, that if the bottom comes in here, we're going to be heading up in earnest. And if we do head up, where's a likely spot? There's that $800. And again, remember we looked on the daily charts. That's this bull ABCD there, right? So there's that 800. And gee whiz, it's right up against a 61.8. Mr. Mountain Man would be shorting. All right. So that's the 4 hour. I think that gives you a pretty good idea of what to look forward from that perspective. Let's go look at the 1 hour. One hour. And this was really cool because, like I said in my commentary, you just don't get markets that give you all three of my trading setups in one window. So when I saw this yesterday, I was just like, holy moly, this is incredible. But anyway, so this was the chart that I published here yesterday. 1 hour BTC CRI 3 setups in detail. And quite a few views, 270 views already. Let's see, any new people? 275. So just since the last time I looked at this, 5 more people have looked at this chart. And as I outlined in the write-up here, this is the double bottom within a double bottom. And let's go back to the live chart. There we go. And let's zoom in on this, see what it looks like. And I was sort of taught this model, I guess 20 years ago. And it's such a simple model. It's just awesome. But anyway, so here's the old high, 688.42. And here's the low, 545.50. So, and this is William Gann. So if you want to research on the web, Gann, his basic principle is that markets retrace 50% of their previous move. And you see this time and time again in the market. It's just a very natural harmonic event, all right? And so the model just basically says that we're just going to trade off our market structure. We don't care about indicators. We don't care about anything else. We just want market structure. And we buy when we see W's, right? And we sell when we see M's. And then to fine-tune this a little bit more, let's get even cheekier and say we will buy a double bottom within a double bottom. Those are the best possible scenarios to buy, and we will sell when we get a double top within a double top. Those are awesome levels to sell. So if we find this scenario and we find that the distance of the smaller inside W or M, that's going to be our risk parameters on the trade, is less than half the distance from the breakout up to the 50% level of the most recent swing high and low, right? That's this level to this level. Then it's a trade that's worth considering. And sure enough, panic low, rally back, test, nice tight little double bottom, gives you a nice little breakout buy signal at 569.01. And your target window should be 606. Is that what number that is? Tough to read when it's that funny color. I'll call it 607. And so not a bad, so what is that? That's about, call it, what, $35 a potential reward. And you're going to risk down to this low, 551. So that's 16, that's 18 bucks of risk. So again, roughly 2 to 1. So you can see, vroom, market went zooming up. It put in a little double top up here, and you might have gotten chicken shit and said, "Oh, what the hell? Let's take profits and walk away." Me, I personally would have preferred that you make sure that you book at least a 2 to 1 risk reward. That way, your winners are always bigger than your losers. And it would have taken some patience, right? And you can see there were more double bottom. There's a double top, there's a double bottom, there's a double bottom. So lots of little sort of gyrating signals in here to drive you crazy. If you had just left the order, said when you put the levels on when you started and said, look, this is my trade setup, this is what I'm going to risk to, this is what I want in reward, and just left them, right? Did not change them, did not, just turn your computer off. We had an old saying when I was trading at Top Step Trader, set it and forget it, right? So boom, you're in, set the levels, and then just walk away. And if you get stopped, well, you get stopped. That's just the way it goes. But sure enough, boom, target was hit. Merry Christmas, nice big fat reward. Trade setup worked. Yay! Then, after that counter trend rally, which happened to be at the 50% level and against significant highs, right? You could argue, I suppose if you wanted to, you could argue, well, let's see if we get a double top and then a double top. You got a cute little top here, but probably not enough for me to consider taking the trade outright. Then you got another, a massive spike down. So, that kind of premise was maybe out the window. I suppose we could argue, looking at the 15-minute charts, we might have gotten justification to short up there. But off of just this 1 hour, I think you just watch this consolidation, right? We had this big run up off the bottom. Where's she going to pull back to? And there's 38.2. Not a big surprise that she came down to there and then bounced away. There's 50% level. If I was an institution, if I was thinking about buying, where should I buy? Well, there's the OTE right down in there. And so off of the 50% level, that's when we got our counter trend rally. And so what I do now at this point is I see this nice solid move lower, then I see the counter trend rally, and so what this does is it sets up the bot trade, where a counter trend rally move of this range, 610, what's this high here? Oh, there's 610. 610 down to 574.40. If the market rallies and then fails within the 33 to 66 zone, that sets up the bot. And the bot basically is a projection. There's A, B, and here is C to D. And so all I do is I clone this fib and I project it off of this high. It gives you the target down here, 563.12. And then I just break these up manually based on the preset parameters. And what I really want to do is I want to say, I want to trade this bear ABCD move. What's an effective way where I can lock in a better than 2-to-1 risk reward and using these levels? And really what this does is it breaks it into quarters. And it says, here's 25% of the move. If you get a technical fail at that level, then enter, and you can see the double top here, eh? Boom, 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 down she goes. Your profit objective, of course, is the bear ABCD target, and you can act accordingly once these levels are hit. And the rules basically say, once the 50% level is hit, then if this is a bottom, then it'll turn and you want to get out of this short. And so once the 50% level is hit, boom, move your stop to break even, right? So we just move, on this event right here, we'd move our stop to break even, and look at that. Look how the market rallied back. Oh my God, we're going to get stopped out, and then resume the trend. So this is a great testament to trader discipline, right? Do not screw around, trader discipline. All right, so market works, boom, hits ABCD target. I have the 66% level on here. There is some debate whether we should move stops to trailing at this level. If I'm trading a really fast market and it's high leverage like crude oil or something, then I might adhere to that. But you can see that even after the 66% level was hit, let's say I moved my stop to trailing, so I have my stop just sitting above this high, then this high, and then as we broke to new lows, so we broke low here, then I can move it up to this high. Boom, you're filled on your AOC. You're out, right? So beautiful example of the bear bought in play. Here's the risk reward parameters, huge reward versus the amount of risk taken, and a very good trade. And what a coincidence, the culmination of this bear ABCD move was right back to the OTE long sweet spot. I mean, isn't that incredible how you see that happen over and over and over again? It's quite remarkable. All right, so the most recent setup here now has been the last setup that I learned, and it's specifically about how you trade range markets. And all it does is it says, okay, here's your top of your range, this 610 area. Here's the bottom of the range, 545. We're going to break this into chunks, where if I get a buy signal in the OTE zone or go long and basically play this trading range, then a fail of the range and I walk away versus a test of the other side of the range, I make profits. I literally create a 2-to-1 risk reward scenario, right? Very important here. So this is all built in. If I get a bullish resolution through the OTE zone, then I'm going to play for a rally back up to the top of the range. And in essence, you can see how basically that is exactly what's happened. And what's really sad is that the public often is selling. Like, I would be willing to bet that if we looked at Willie here, I bet Willie was nice and stupid. Let's, just for amusement's sake, let's go take a look. All right. Oh, look at that. Just barely. Not quite. Almost. So this is a total suckers move down to new lows here. Totally trapped. Look at momentum was in total divergence here. What did volume look like? Oh, volume even turned up here. So, oh boy, shorting this would have just been asking for trouble. I myself probably would really like to see nice double bottom within double bottom here. You can see that happened. So we had new low, rally away, test of the low, then double bottom, tight, 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 tight double bottoms. So you could argue I could get long anywhere in here. And like I said earlier, the OTE trade is to actually buy the sweet spot right there, so we could draw a horizontal line off of that. Horizontal, right? Boosh, right? So that came right in there. And, just off of this parameters, there's the reward, there's the, there's the risk, there's the potential reward. And you can see how she's just chunk, 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 slowly moved her way up here. It's getting a little dangerous up in here, but had you taken this setup, obviously you'd be in profits. I really don't like the idea of discretionary trading. You often end up shooting yourself in the foot. If I said, all right, I'm just chicken, I want to get out, the interesting thing about doing that right here is that, these boxes will drive you crazy. How am I going to do this? Let's go like that. All right. So this is 1-to-1 risk reward right there. So if you abandon the trade right now, you would just be barely getting 1-to-1. And the interesting thing about trading, right, is that we're not always going to be right. And in actual fact, you want to take that whole rightness out of the trader's equation. You don't want to base your business on being right in the market, because that's dangerous. You're just, you know what you do when you do that? You're actually setting yourself up for failure. You're not setting yourself up for success. And so what ends up happening is that, if you start, second guessing, oh my God, MACD's breaking down. Oh, look how stupid Willie is. Well, okay, that's fine if you can take profits, up here, you know. You might have looked at this and gone, gee whiz, look at this. This rally to new highs on the MACD. It couldn't, not only is it a bear divergence, it couldn't even get above zero. And look at Willie's nice and stupid up here. All right, I'm going to get out and take my profits here. I want out, get me out. Boom. Okay, fine. If you got your fill here, and let's say you got filled halfway in between. So let's say you got lucky and you got filled there. That's okay, right? Because if we show the risk versus reward, your reward is substantially higher than your risk, right? So that's okay. I don't mind that. What ends up happening, though, often I find, and if I found it for myself, it's certainly not like I'm different than all of you guys. I'm exactly the same. Is that you don't get the fill here. You end up maybe going, oh crap, look at it breaking down. Okay, fine, I'll get out. I'm discretion. I just want to hit the bid and get out here. And you actually end up getting filled here, right? So now your reward at getting filled here looks like this versus your risk. And if you end up doing that, and let's say you're right, 50, 60% of the time, and let's face it, everybody goes through periods where they have a whole bunch of losers. It's just the way the market works. If you keep racking up trades that have this kind of risk reward model, maybe you'll be like scratch or slightly positive, but you're not making enough money to make a living off of this. So the key here is you got to make sure that this reward is substantially bigger than the risk taken. So that's why, again, we talked about set it and forget it, right? It would almost be in your best interest to set it and forget it and just watch these develop. And if this trade fails and you end up actually getting stopped out, well, so be it. You followed your model. You were right 2 out of 3 shots, and you got paid handsomely on these shots. And you took a lot of the anxiety and stress over the trade setup out of the equation. And the irony of it all is that, if you did the set it and forget it model, you're still long and you're not even looking at the market right now. You're just like, oh, I just wait for my levels. I'm out playing golf. I'm heading off to Disneyland with the kids. So, and interestingly enough, look at what's happening here. I could see a bottom come in here and this SOB take off. So go figure, right? All right. So that's sort of the current 1 hour view of what I see going on. I think I had pointed out that there was on the higher time frame charts that you could see this Gartley, the bullish Gartley working here, right? And if that's the case, we should be looking for a rally up into this area at least. We could even be aggressive enough to go like that. Right? That's very realistic. That would, of course, validate this trade setup, right? And that's basically where I am right at the moment, is that if I was to leave off the show here and say, okay, we're done for the day, what's my sort of bias at the moment? I'd have to be thinking long. The latest setup is the OTE, looking for a test of this high. And as we pointed out on the higher time frame charts, really, I guess off the 4 hour here, I've been making the argument that we're range bound between this 605 and this 545, call it, what's this level in here? 550 level on the downside. And really, I think that Monday we're going to find out about what the auction results were, and we should get a pretty good idea come Monday which way she wants to go. Might correct hard. There's definitely a possibility for correction down. There's definitely a possibility for a moonshot here up to 800. Both scenarios are definitely on the table. And really, I'm just going to let price action itself tell me which way to go. As it stands right at the moment, the latest setup is a long setup, and it's working away. And really, if we get a breakout through the top here, I suppose one could argue that this will set up a bullish bot, and we'll draw the fibs off of that in the coming sessions. Don't want to put the cart before the horse, but that's definitely on the table. In fact, you know what we'll do is we'll probably say that will be our looking forward idea. All right, so I've been talking away for a while now. I think that sort of summarizes the chart setups at the moment. As we said, the latest signal right now is this long OTE setup, and it's working its way up higher here. Zip, zip, zip. All right, so looking back at sort of our schedule and what we were planning on doing here today. Let's go there. Yeah, something like that. Okay, so let's pop back over there. Okay. So we've talked about the short format. We've talked about PAM. We've done the weekly, today we did daily, 1 4 hour and 1 hour. I'll leave it at that for now. I think that's probably enough chart analysis to leave off for the time being. And it sort of gives you an idea of the detailed analysis that I do in the members section. I suppose 15-minute we could take a look at that, but maybe we'll do that next weekend. And we've talked a bit about what we should look for technically over the coming week and what levels we should keep an eye on. So just to wrap up sort of today's show here, just, I guess, a quick boo at a couple of recently published charts, just for your review. We'll start with, I published this chart on the US dollar index. Always a good idea for us to keep an eye on the US dollar index. This is our sort of financial asset proxy, our paper proxy, and the 17.5 year fear cycle that we're in right in the moment started at the end of the dot-com boom, and the millennium is expected to go through to Q3 2017. Excuse me. So, we're just sort of marching our way along here. Thought it was interesting to see that as soon as the Democrats came back into the White House, the bear sort of took a pause. And I might argue that, as we sort of get into the twilight of Mr. Obama's administration, I don't think there's a clear verdict whether Democrats or Republicans win the next election. My hunch is that Joe Biden really hasn't made that much of an impression on the American public, and I wouldn't be surprised if there's going to be some sort of Ronald Reagan type Republican coming riding into Washington on his pony to save the day. very much like there was in the end of the 70s and the beginning of the 80s. And really, that should sort of be the culmination of this fear cycle move. I wouldn't be surprised if they announce some massive tax cut, which of course sends the U.S. dollar into a tailspin, and we find our ultimate low. I don't, the interesting thing about cycle analysis is you really have no idea what the reason is behind these moves. But I feel fairly confident in this chart, and I've been talking about it for a while. And basically, we're just right on schedule. I don't really see anything changing there. Um, all right. I also wanted to talk about, and I thought it was interesting because, if you are a U.S. dollar bear, then by definition, historically, that meant that you should be a gold bull. And gold's been in the tank for quite a while now. But one area of the gold market that I find really interesting, and I really love this WDB options model that we developed because it really identifies value ideas, is gold stocks. Gold stocks to me some of them look just ridiculous. And one of the stocks that came up on the model back where you see this vertical line was this AKG or Sanko Gold. Nice low share count, incredible fundamentals, price to book, trading less than book, trading, 2 times cash, quick ratio of 41.6 is basically the amount of cash that they have on book relative to their expenditures. Companies that are carrying a lot of debt, they have a lot of interest rate expenditures. So, um, you know, companies that have no debt have no expenditures there, and so that's the situation with this company. They just got a ton of money on the books, no debt, and pretty good share structure, and trading less than book value. When it came up on the screen, the option itself was a August $5 put at $3. Um, so that would basically be the strike price up in here. But at $3.10, that brings your cost all the way down to $1.90. So that's the cash cost on the stock right there. Because we hold these stocks on margin in the WDB portfolio, there's your margin requirement to hold the stock. And that is basically $1.50. And of course, as we said, you got paid $3 to take the position. So you just got paid ridiculous amount of money relative to the carrying costs. Technically speaking, there's our good old 38.2 fib right there, our first stop target. If we get a rally up into this $3.80 area, that represents basically a doubling of the asset versus our cash cost. So as a result, I have a strict rule that says sell half of the position on a double, so you get yourself into a risk-free trade. So that's this level right here. And lo and behold, we've got this beautiful downtrend line that was broken. Nice double bottom coming out of that, and that was on heavy volume. So, interesting, we talked about Willie earlier, resolving through the 50 line here after the stupid condition. Here's that stupid condition on Willie here on the AKG. Sadly, the public was probably selling pretty heavily in here. Look at this big down red bars here. And, really, well, this isn't a justification to buy in itself. It just tells me, Brian, don't be stupid and don't go and sell this right here. And sure enough, I actually argue that we now have a technical bottom in this stock. And I'm looking for, this 2-to-1 level, which is just sell half on a double rule. To be hit here. And, the fact that we had this nice big volume surge just, pleases me to no end. So, it's just yet another example of this WDB model demonstrating like really good value investing. And then also here comes the technical bottom. So now a stock like this becomes what we call a rational idea. So interesting that U.S. Looking at our U.S. dollar and what our forecast is, how gold should move in the opposite direction, and what I see are some very interesting value levels, and now some technical justification to be buying the gold stocks. So very interesting stuff. Um, all right, so I think that brings us to the last thing I wanted to talk about in this show today. And that was, I wanted to just touch on, where are we here? Oops. Um, I wanted, and really what I'd really like, I think, is to get your feedback on this. So if you guys are watching this and you have ideas and suggestions, then please let me know. But I think what we're going to do here is I'm going to leave the old site up and running because that has a lot of the stock information and the algos running it. And the new sort of Bitcoin site that we're going to concentrate on for this service is going to be broken into three different things. And that is, and that's sort of what we're talking about here with these site issues and memberships and stuff. I think what we're going to do is we're going to create this school, right? As we called it, the School for Bitcoin Traders. Kind of like that. I like the 12-week program. So 8 weeks of intensive learning, and then 4 weeks of actual practical application. And I think a realistic fee for that is 0.15 BTC per month. Really that's like $300 at current prices. So not a bad price. I think that there are some people that already know how to chart and they just want to get sort of my levels and my ideas. And you see by this Saturday show that basically I go into this sort of depth and detail off of the lower time frame charts on a daily basis for the membership, and that's in the RI live room that we're doing. So I think I'm going to do that plus the real-time blog fee, and I'm going to charge 0.05 BTC per month. So very cheap, only like $30 a month for that. And then last sort of option is you can follow the RI setups on the PAM and basically duplicate whatever trades that the model does. That's basically the daily video model. And I'll charge you a fee of 0.05 BTC a month to participate in that model, irregardless of returns. So if you want to participate, that's what the fee is. And then you participate, of course, in the capital appreciation of whatever the model does. So I think those are the three subscription services that I'm kicking around at the moment. And as I tweeted today, I think I just want to get going on this. I find that if you let this stuff flounder, then it just does that. It just sits and flounders. So what I put out today is I want to officially get the course up and running, and the 8-week video session program. I want to start the first one Saturday, July 12th. So basically what we're going to do, and I don't know whether I can give you a sneak peek or not, but this is the new site. So here's just a sneak preview of the website, the new website, and as it's working out. And as I pointed out just a moment ago, on this site here, it's sort of like the 21st century version of my flunky 1980 site. And basically, I outline what's required, in my opinion, to be a good trader. And the course is, in essence, designed to meet all of these points. And each of these rooms are Well, I don't really want to get too much into this. I just wanted to give you a sneak peek. The point of the matter here is that all of the tutorial information is going to just be sitting on the pages here, and it's fully customized to get you going as a slick trader. The point that I would just make, and this is what I'm trying to get to on all of this, is that if you are interested in taking this 8-week program or 12-week, I haven't quite figured it out. I would like you to let me know in that there's only going to be 10 spots for the first series. Each series is only going to have 10 spots. And so as a result, those people that sign up right away, as soon as those 10 spots are filled, then we're going to close up shop for this series. We'll do a new series probably like maybe every 2 weeks, maybe once a month kind of idea. But for the school itself, I want to limit the classes to only 10 people. So if you are interested, like I've been posting on the Twitter feed, make sure to get back to me and make sure that you get your spot reserved. Okay? So anyway, hopefully that wasn't too long-winded. All right, so let's just take a look again at our schedule and see how we're doing here. All right, so that was talking a bit about the school, 12-week, 8-week. I haven't quite figured out. I think I'd like to have it 8 weeks of instruction and 12 week and 4 weeks of one-on-one trading, sort of mentorship, if you will. So, option number 2, just subscribe to the live room feed, the daily in-depth analysis, plus the blog feed. And option 3 is follow the setups on the PAM service. And then, as always, I mean, like this show here, now we're approaching 2 hours. Holy crap, maybe an hour and a half. Takes a lot of work to put all this together, so by all means, if you are interested in reciprocating, making me feel better, donations for the time being are greatly appreciated. Greatly appreciated. Just to review that, we can show you how you go about that. Off the old site, basically, I have a nice big fat donate button here. Just click it, click on the address, and away you go. And you guys have helped me out immensely here, so thank you very much. All right, and I think that basically brings us to an end here. I'm all talked out. I sure can talk, though, eh? Let's pop back over to the schedule. All right, what do I have to do next? Wrap up and conclusion. So, none of this could be possible without the YouTube, Google platform. So, big shout out to YouTube and Google. They do an excellent job with their software. Sometimes it's challenging, but generally it's pretty good. Big shout out to TradingView. These free charting services are absolutely great for helping me both take my setups and demonstrate them to you. And big shout out to you, the listeners. I wouldn't be doing this if you guys didn't keep telling me that you're interested in this stuff. So really, really happy with the feedback I've been getting, and thank you very much for your ongoing participation and support. Big thing, shout out to Romano for getting me focused on getting this new site going, and Julian helping me build out the WordPress site. So thank you very much, gentlemen. And can't wait to get this course going because I think it's going to be totally awesome. And all the feedback I'm getting, I'm so pleased with what I'm hearing that I think you guys are all going to really enjoy this. So on that note, I think we'll bring the show to an end. This has been a CR investor, Brian Beamish, the Canadian Rational Investor. Now, the rationalinvestor.co. So many acronyms. Coming to you here Saturday, actually it's Sunday now, Sunday, June 29th, with our Bitcoin show and site review. Hope you all have a great week. Looks like we got lots of fireworks in store, both up and down on Bitcoin, so it should be fun to watch all of this play out. And I suppose look for my Monday morning 5-minute, 10-minute review to get an idea of what the action is at that point. All right, so have a great week, everybody. All the best. Happy trading. Good luck, and give me lots of feedback, and we'll talk to you soon. Bye for now.